Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. This is where we talk about growth and income stocks with Alex Kolb, our growth and income stock analyst at Zacks.com. You've got a couple of technology picks here today that you wanted to talk about. Harris Corporation is one. HRS is the ticker symbol. They're in information technology, but with a specific focus, right?
Yeah, communications, and it's actually communications and IT services, and actually maybe even a little more communications. They serve mainly government and commercial markets, so that actually pretty much covers the gamut.
But a lot of work in the defense area.
Yeah, and that's what I mean, the defense communications in the defense area, exactly. Yeah.
So where's the growth, where's the income?
On the income side, there is a 2% dividend yield here. That's above the industry average. It translates into an annual dividend of 88 cents. And as far as growth, the company just reported a solid first quarter not too long ago. As far as earnings growth, you can see here it's 83 cents per share. That's above the Zacks consensus estimate by 9%. Revenue also grew, went from last year's 1.17 billion to 1.20. And that caused the company to hike its annual earnings guidance. It's at 374. It ranges from 374 to 384. That's up from a previous guidance of 3.25 to 340. And analysts followed suit. They're bullish on earnings as well. As far as the full year, you can see here they're even slightly more bullish than the company itself, 385. And also the analysts the estimates, I should say, are up all across the board. Strong fundamentals also translated into a strong momentum here on the technical side. Over the past 3 months, I'm comparing it to the S&P 500. The share price here is up about 30% over the past 3 months. A lot of that had to do with the solid fiscal first quarter.
Syntel is another one that you wanted to talk about, SYNT, the ticker symbol. They're in technology, but outsourcing.
Yeah,
right?
Outsourced to several areas, financial services, retail, automotive, just to name a few, but IT outsourcing, that's correct. I'll start with income here as well. It's 0.61 as far as the yield. That's low, but it is high in terms of in comparison to industry competitors, I should say. So at 0.61 yield, that's 24 cents in terms of an annual dividend. The company actually just recently declared a quarterly dividend of 6 cents. It is payable on January 14th to shareholders of record as of December 31st. They also recently reported third quarter results. They saw 73 cents in terms of earnings. That's 24% above the Zacks consensus estimate, and revenue is up 1% year over year. The company is also bullish on guidance. They hiked their guidance to $2.60 to $2.65 is the range. Analysts are in agreement, as you can see here. We're looking at a full year estimate of $2.64, and estimates are up all across the board on this one as well. And again, with this one, the fundamentals are solid. The analysts polled by Zacks are bullish, and that translates into a bullish share price also. I'm comparing this one to the S&P 500 also. This is over a full year. It has been outperforming the S&P, which is what we look for in our picks.
And do you own either of these two?
I do not.
Check out other growth and income stock picks and other stock picks and other investing categories on our homepage at Zacks.com. In the upper right-hand corner of the homepage is where we post 4 new ideas for you daily, Monday through Friday, on all business days. With Alex Kolb, I'm Terry Ruffalo.